In our lives, we often make choices. And in considering those choices, we think, what are the rewards? What are the opportunities here? What's the carrot? But with choices also come risks. What might go wrong? What's the stick I might get whacked by? And when we're making those choices and decisions, we're weighing up those risks and opportunities. And we're careful to ensure that we don't take on too much risk so the reward isn't worth it. I'm an actuary. It's my job to help banks and insurers make financial decisions by analyzing the risks and opportunities before them. So for example, insurers take on a little bit of risk that your house might get damaged, and in return they get the reward of premium that you pay them. Banks charge you a little bit of interest on your home loan, and in return they take the risk that you may not be able to afford to pay them back. So a little bit of risk is good for banks and insurers, and as an actuary, it's my job to help them assess that balance. But I also specialize in climate change. I help banks and insurers understand what climate change means for them, what it will do to these risks and rewards that they face. And we know there are some serious risks from climate change. We know there are risks to our survival as a species. We know that uncontrolled climate change will lead to increased disasters like bushfires, heat waves, floods. And what about our jobs and our economy as we try to reduce our emissions by closing coal mines and not burning gas? Those risks that banks and insurers take on may become too big. Scientists tell us that it is unequivocal that climate change caused by greenhouse gases, increasing temperatures, will lead to increased natural disasters. We're already seeing that. I mean, we saw the floods in Lismore this year, and a couple of years ago, the bushfires of 2020, when our world was literally on fire. And banks and insurers will suffer too, because as those disasters increase, costs to insurers will go up. And if you are living somewhere exposed to these natural disasters, then your premiums will go up. And if they go up too much and you can't afford to buy insurance anymore, that's a problem for your insurer. Insurers don't have some magical financial formula to pay cyclones to go away or bushfires not to burn houses. And it's a problem for banks too, because if your home isn't insured and you suffer a cyclone, you might struggle to pay your home loan. And that's a financial consequence for the bank. So those little risks that banks and insurers take on, they may become too big. Banks are already concerned about your home loans if you're working in one of these industries that will close down as we try and reduce emissions. They're also concerned about farming and agriculture. Banks lend a lot of money to farms. Farmers are very dependent on funding. But as droughts and bushfires increase, as the tropics expand and new diseases and pests move southward into Australia, we might suffer failures in harvests and food shortages. Regulators here in Australia are already concerned about this. They're worried that our financial system may not survive. They've asked major banks to do some tests to see how vulnerable they are to these climate impacts. And it's not just in Australia. The European banks have also just done a similar study. And the frightening conclusion they came to was that they're just not ready for climate risk. We know that climate risk is not just an environmental risk, it's also a financial risk. One of the other things, to make matters even worse, is that climate change won't affect us all equally. We know that vulnerable people, older people, children, people with lower incomes and people with lack of economic opportunities, people who are already struggling today, are living in vulnerable houses. The cheaper houses in floodplains, or the ones at the edge of cities that are exposed to bushfires. And I've been doing some analysis as an actuary, and that's showing that these vulnerable people will be most affected by climate change. So climate change is not just an environmental risk, a financial risk, it's also a social risk for us. It's pretty depressing, isn't it? And it is a struggle for me to keep working at this issue. And it's even worse when there's some banks and insurers out there that are still funding and supporting fossil fuels, when those fossil fuels are going to increase the financial risks to those banks and insurers. They're still trying to make profits today when those profits will make insurance premiums more expensive and harder for people to pay their home loans. That makes no actuarial sense. It makes no sense at all. But then I remember, with great risk comes great opportunities. Banks and insurers have the opportunity to invest in the future of Australia, to invest in new technology that can make Australia an energy superpower. They can invest or support the building of better houses that can stand up to the climate of the future. I've been doing some analysis about what's the best way we can do this. And is it building levees around towns? Is it lifting up houses so that they don't flood? Is it better materials or better design? And that actuarial analysis is showing that every dollar we spend on building more and protecting our homes actually saves us $10 in disaster costs. That makes financial sense for the government to invest in that. It makes financial sense for insurers and it makes financial sense for us. It's a triple win. Banks can help too. If your home is in a disaster area or at risk of cyclones and floods, they can lend you extra money so that you can protect your house. Things like strapping down your roofs better so that they don't fly off in a cyclone. That's good for your house, that's good for the bank, and that's good for you. A triple win. And what about emissions? Banks can invest in new technologies that will reduce emissions at a grand scale, like large-scale renewables, but they can also lend homeowners money at low interest rates to put solar on your roof. Did you know that half of all car repairs are paid for by an insurance company? So that gives insurers a huge opportunity to try and influence how we build and repair cars, an opportunity to make that more sustainable. I mean, one example is using recycled car parts. That would reduce the emissions involved in making and repairing cars, and actually, recycled car parts could be cheaper, making insurance cheaper, which would be a win for people buying insurance, would be a win for the insurers, and a win for the planet. How many of you have a big battery, like in your car or in your home? Not too long now, we'll all be dependent on at least 2 batteries. And we'll want insurance on that, because we'll want those, if they break, we want someone to fix them quickly. Insurers and actuaries at insurers are already trying to figure out how to sell this type of insurance. But there are all sorts of technologies that we're going to need going forward, and insurers can help by insuring those new technologies. For example, offshore wind farms. But there's still lots to do. You can make a difference. You can ask your bank how they're responding to climate change. You can ask your insurer, are they still investing in companies that are making fossil fuels worse? You can move your money to banks and insurers that are investing in the future of Australia. That's an opportunity for you. And it's a huge opportunity for banks and insurers, for them to invest in the future of Australia, securing our jobs, our families, and our homes. And together, we can reduce the risk and seize the opportunities from climate change. Thank you.